Well, good afternoon, everyone. Welcome to yet another uLaw webinar. In today's topic, we're going to be covering Law Society's bookkeeping compliance. Now, this webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, New Brunswick, and British Columbia. So for our friends and colleagues and legal professionals joining us from these 3 provinces, So kindly do use the chat window to ask any questions that you may have with regards to today's webinar on Law Society bookkeeping compliance. And it's going to be a strict 1 hour session where we're going to talk about the rules, the expectations of the Law Society across multiple provinces in terms of the bookkeeping needs, how you manage certain documents, and what those documents are that you are required to provide and generate on a periodic basis and also provide during any audits. Okay? Once again, I repeat that today's webinar on Law Society bookkeeping compliance is accredited for 1 hour of CPD credits, professionalism CPD credits. Like every other uLaw webinar, today's webinar has a set agenda. We're going to talk about the different documents that are under that bookkeeping compliance that the Law Society expects from you as a legal professional to manage and maintain and produce during audits or regular checkups that you may have regardless of which province that you're in. So we'll look at what are ledgers, both from a trust account as well as a general account. We'll talk about what it takes to maintain them, what are the components of these ledgers. We'll talk about journals, both disbursements as well as receivable journals. What are the components of these journals? How do you manage and maintain them? And then we'll talk about one of the most important components or documents of a bookkeeping compliance. Very important that you reconcile your bank statements, again, for both trust and general accounts. So for those legal professionals that do not use or have a trust account, obviously you have to discount that you don't have to deal with trust account requirements, and you're only dealing with general account requirements, okay? But if you do use both, then it's very important that you reconcile both your trust and your general accounts. And when we talk about reconciliation, we'll also can this entire process of reconciling be simplified, and how do we go about doing that? We'll also talk about fee book. Now, what is a fee book? How do you manage it across your firm? And why it's important for you to manage and maintain it? And based on certain other provinces, for example, such as Ontario, there may be some additional compliance documents that are required as part of that bookkeeping compliance, such as the Form 9A, which is a document that's required to be maintained any time that you do a transfer, an electronic bank transfer to be specific, from a trust account to a general account, or from a trust account to any other account for that matter, as long as it's done electronically done through your bank, okay? And finally, we'll talk about this being one of the most important components of your legal business is managing these compliance documents. How can you be more efficient in managing it by using certain tools such as legal accounting software, and how you can reduce the amount of time that you may spend if you were to do this in a very manual process, okay? So let's talk about ledgers, let's talk about journals, reconciliation, fee book, and some other compliance documents, and let's hopefully have some fun doing it. I'll use the uLaw as an example of how you can go about generating these documents. Again, in no way are we looking to sell our product, though uLawPractice is a legal accounting and practice management software. We're specifically only going to use to demonstrate these documents and the components of these documents. And we'll start with just, a bit of a pretext or a bit of a context in terms of how accounting systems have evolved, the options legal professionals had in this particular industry, and how they went about doing this from many years back. Okay, so it all started with a maybe a manual double entry system, very simple, very inexpensive to manage, but extremely time consuming. Especially if you have a large number of transactions, then you certainly have to ensure that you're doing the double entry manually on 2 different systems. Okay, you're not using any tools. This is all manual. So human error is one of the biggest components of the problems that this particular process had. Okay, arithmetic errors or any other types of human error can result in the books not being balanced. The amount of time that you might end up spending or may outsource this work to a bookkeeper or accountant, and the time that they spend in doing this manually costs time and money too. Okay. And then with time, it did evolve to maybe in one write system, which was slightly simpler. It reduced the amount of subledgering posting that was required. But then with evolution of that came a spreadsheet software, such as an Excel sheet or otherwise a spreadsheet software where it was still inexpensive. It now allowed you to do automated calculations, so really reduced the amount of human error when it came to mathematical calculations. But it was still time consuming because you still had to enter all the data as well as the transaction. Then the last 2 line items that you see here are what we see in today's context. You see general accounting software, and these are softwares that are allowing you to obviously manage your transactions, manage all the calculations automatically, do all the ledgers, all that great stuff that were otherwise done manually in the past. But when it comes to legal accounting requirements, the general accounting softwares don't necessarily provide you with the reports that are specific to the requirements of the Law Society's requirements, right? And then from the general accounting software are what you find are best-of-breed legal accounting softwares that were purpose-built and designed to deal with trust accounting and all of the Law Society's compliance. Not that you couldn't do it with any other system, but it's just a more effective, more efficient way to do it, and it's available to you in the software. And you can obviously do the homework, talk to friends, talk to the industry, and find out what system works for them, try it out, and figure out what software works best for you. One of the fundamentals is, in today's context of being a 21st century law professional, making use of tools that can generate the set of documents that we're going to talk about, and building a process around your firm to utilize that tool's efficiencies in the product features functionalities so that you can reduce the time that you take to put that into manual effort. Okay? Okay, so we spoke about getting started with ledgers. Okay? And we're going to try and cover both trust and general right away in this one screenshot. And this was taken right off the Law Society's bookkeeping compliance. And if you really look at the core components of this ledger, and let's start with a trust ledger on the left-hand side of the screen where it says Client's Trust Ledger. The core data components that are captured start with the date. These are transactions that have occurred in your legal firm where you've met with a client and there was a money that was either deposited into the trust account or on behalf of a client, money left your trust account. So it was either money coming in or leaving a trust account, let's say on behalf of a client, and that's your client's trust ledger, right? And what the Law Society requires you to do is do that ledger across a date range. Okay, so maybe a month, you could do it every 2 weeks, but traditionally they ask you for a month time period. But within that month, it's required that you provide the ledger with all these data components for all the clients that you've dealt with. Okay, so as you can see, there's a count for Ms. Kim Kirby. There's also within that same date range, let's assume this is for the month of October, there's also a Peter Piper with the same piece of information. Okay, so you have the date, very important. You have the particulars of that transaction, or a descriptive nature of what actually was that transaction for and what were you dealing with. Okay, so basically